So I want to get this chart out to the team for a couple of reasons. One, this is our Matic setup I was talking about this morning, and this is the cup and handle pattern that I was discussing in group this morning. So you have a cup, you have a handle, here's your neckline. With a cup and handle pattern, you're going to want to buy the breakout of the neckline, so of about $1.80. So provided this candle closes above here, I would look to enter. And you're going to want the next candle to close above as well. That would be confirmation. So this triggers it. This is what I mean by moving. So when I say something's moving, it's going above our targeted trend line or neckline. And then a confirmed breakout means that the candle has closed above our neckline or trend line. Confirmation is when the next candle, so let's say you're on a daily time frame, that's fine. You can even go down to an hourly time frame and wait for the next hour to close above. So if you have one and you have the next one that closes above this neckline, you guys are in. However, what I want to really bring to your attention, and this is where I really want you guys to get better at, is buying on the 200 simple. You can see how Matic was running at the 200 simple and blew up, right? I mean, you could have been buying Matic February of this year at like 6 cents. I mean, let's see if we can pull this up. You're talking 6 cents up to here. This is the gains that you want. This is where your portfolio really jumps. You know, getting 7,000, and you're getting almost like 70 times your money. That's the gains that you want. However, let's say you missed all that. Bitcoin was going off, other things were going off. You missed it around the bottoms. We didn't hit any of this. Now, this is why you want to enter on the 200, because if you're entering on this touch or you're entering on this touch, you're already up. So what I mean by when I tell you that the lower something is, the less riskier it is, you're entering here. It took Matic from June, and it tried to touch it here in September. Now it's trying again here in October. You're going from June to October before it can really try and break this neckline again. It might get rejected, so entering this can be tricky. That's a breakout trade. However, if you're entering here where the bots are and the machines are, you are already up. So let's say you entered here and you're driving to where our price is. You've already went 1.5 your portfolio. You're up 168%. Let's say you missed that one and you entered here on this touch. You're already up 71%. So my point is, whether Matic breaks out or not, you've either more than doubled your portfolio from this entry or you're close to doubling your portfolio. So even if Matic were to fail, you're already up and you could sell on some level of support. So you have like a wick here and a wick here. You might have some level of support, as this is not this is not a perfect cup and handle. I don't know if the cup is starting on this touch. However, you get the wick up here, so it might be starting from this. This is definitely not a straight cup and handle, but however, the pattern is there. But you would look to actually be selling in these positions. However, you wouldn't sell your entire position. You might start taking some profit off the table, especially after you doubled your portfolio. You might start taking some profit off the table. And if this cup and handle were to break out, you let the rest of your portfolio ride, because you always want to take profits on the way up. Or let's just say this is your next level of support. Matic comes on down, bounces onto this support. You can, and holds. You keep your portfolio in. Or if you haven't caught any of this, you might want to use this as some level of support here or support here. So that's what I mean by support. If the white lines are below the price action, that's what I mean by support, and you want to enter in on support. That's where you want to enter. You don't want to enter the top of green candles like this. You want to enter on bounce back. So if you have support, a lot of buyers are coming in, and hopefully the price starts to take off. So it looks like Matic, to wrap it up, Matic has formed a cup and handle. Either the neckline is here or the neckline is here. Again, it's not perfect. but this is your safer neckline as an entry. You can enter in on support if you haven't, but again, the key takeaway from this entire video is why, especially on the daily, I love entering on 200 SMA taps, because now I can let this ride. So again, maybe I entered here in July and it took me to October, but I've already doubled my portfolio. More than doubled. So that's the key takeaway. As the market melts down, you got to remember, this was July. This is when Bitcoin was tanking, everything was tanking, and everyone thought that everything was going to go back down to zero. That is when I love to dive into the market. When the markets are bleeding red and you get this huge, this is probably a week and a half of a sell-off right here. You got to remember, each candle is a week. This thing sold off from May all the way to straight downward action. And that's why I don't catch the falling knives. Because again, you get some support and it just falls. However, this 200 SMA held as support. You really want to look onto the daily charts for your longer term buys, especially if you don't have time to trade this daily market in and out. This could have been an easy longer term buy right here, and you could have re-entered your position here. And you could have either doubled your position, or if you miss this, you're entering here on confirmation. And now you're up. You're up between 78 and 168% in your portfolio. Now you're taking profits when others are trying to determine this breakout. That's how I would like to trade. I could set it, forget it, let this thing ride, let the patterns play out, let the market dictate what you do instead of you having to make a decision.